Hello and welcome everyone to another episode of Investology by Finity. Today we have a stalwart of the mutual fund industry with us, Mr. A. Balasubramanian. He is the managing director and chief executive officer of Aditya Birla Sun Life's asset management company. He has been associated with Aditya Birla since 1994, and as the MD and CEO, he oversees assets over 3.1 lakh crore rupees. And Bala is also the chairman of AMFI, and he was also the chairman of AMFI from 2016 to 2018, after which he was reappointed in 2021. Bala, welcome to the show.
Thanks, Abhilash, for having me part of this show today. Let me also convey my best wishes to everyone for the year 2022.
Absolutely. Happy New Year to all our viewers. And depending on which part of the country you are in, happy Makar Sankranti, Pongal, Bihu, or Lori. Season's greetings from all of us here. So, Bala, the topic for today is market outlook for 2022. As you know, 2021, as per many, is was the golden year for equity investors. We saw a lot of new equity investors coming into the markets for the first time. Nifty 50 gave returns of about 24 percentage, while Nifty mid cap 100 and small cap 100 gave about 46 and 59 percentage respectively. What are the broad trends that you saw in the markets and in the mutual fund industry in 2021? If you can talk a little bit about that.
Yeah. See, I think clearly 2021 was filled with lots of one side worry, the second side hope and optimism. I think both coexisted in the year 2021. So when the worry is actually too much, naturally people come together, especially the policymakers, Government of India, Reserve Bank of India, and other regulators. They come together. They ensure how do I remove the worry, so that the world at large do not too much bother about the worry thing that comes and affect them, and focus on how the life will move on as we move forward. Right? That's a broad principle in which it's driven. Therefore, I would say both the 2020 and 2021, while it was both the years were filled with a lot of uncertainty, but the way the directions are given in improving the overall hope and optimism from the economic activities point of view to drive the various macro factors that impacts the economic growth, each of the points were addressed last 2 years. The form of making interest rates low and the lending rates low, liquidity is high, and then corporate start cutting down the cost, focus on revenue improvement, and in general, price levels were high. If the price levels are high for commodities, naturally for the producers are good. Therefore, the profits are coming back. And finally, the technological evaluation that happened globally increased the overall spending towards technological spending. In totality, if you look at optimism, gave confidence to the growth comeback, and therefore the stock price did very well. So, and top of it, during this pandemic period, the understanding of investing in capital market had gone up quite significantly. I think even the people who always thought that investing in equity or mutual funds are not that great idea, all of them would have changed their idea, changed their mindset idea in the last 2 years, because they got a lot of experience of how money can be invested. Therefore, they increase the level of participation in India, but still not as big as what we have seen in the US market. US is, of course, everybody goes for equity. India is most of us go for fixed deposit investment. There's a cultural shift also happened. I think the combination of all these things which happened in 2021. If you ask me, as we move to 2022, most of the stuff is also getting carried forward, right? I think in the market, as we do it in accounting, as we close the books of accounts, we carry forward some of the balances next year, right? So the same way, if you ask me, the positivity, optimism, the hope, they're all now getting carried forward for the year 2022 as well.
Yeah, Bala, so you mentioned a couple of interesting things. A lot of new people coming in, learning about investing in equities in the markets have gone up. And we've seen record number of demat accounts open, record SIP inflows, especially from new investors. What do you think is the reason behind that? I mean, does it have, I mean, different people have different ideas, right? Some people say there was COVID, people are sitting at home and they had nothing else to do, so they are investing in the markets. Some people say generally during pandemics and such situations, risk taking ability of people go up. So what is your view of what was different this time, or what led to such an influx of people and money into the equity markets?
I think the bigger points which I see during the pandemic period, during the lockdown, of course, you are busy with the work, no doubt. At the same time, you also got enough time for you to do upgrade your knowledge, rather, I would say. So, knowledge upgrade happens. Those who thought investing is a rocket science, suddenly they would have realized investing is not a rocket science, is a common sense approach. Why I'm specifically saying this is when I used to give a lecture the last 30 years of my career, we used to go and give a public speaking. Sometimes we go and speak in the college and all. One of the common sentences I always used to use: investing is nothing but a common sense approach. So investing is not a rocket science. It's not somebody's what you call proprietary right to have investment as a right. Everybody can do it as long as one applies a common sense approach. Probably, I would assume during the period of pandemic, the understanding of investing would have gone up quite significantly. And second is the mutual funds have been doing a great job. So I am being part of the mutual fund for the last 20 years. The kind of educational initiative that they have taken in making people realize about importance of investing, importance of power of compounding, importance of beating the inflation in the long run to save, put your money to generate better return for you, importance of savings for your future needs, you are protect your future retirement by way of investing. And finally, when you are actually happily spending your money in various activities, investments also you consider as if you are spending rather than investing. Therefore, you keep the money for the longer term. So that's the way I think the mindset got developed in the last few years. Pandemic definitely further strengthened that approach which every investor would have had. Second, I think what is also happening in a one-side rising market. Normally, what happens is I have seen this historically in the multiple cycles. In a rising market, when you invest, the probability of making money in every investment that you make is far higher. Every investment that you make in the market by yourself, or by listening to somebody, or investing in mutual funds, or listening to experts' advice, whichever way you see it, the probability of making at least little money is also high. You will not make big money, you will not multiply your money, but definitely you will be in a positive return. See, most of the people get satisfied with the positive return they get, therefore, they boost the confidence. They boost the confidence, they start thinking, oh, that's the way I have to manage my money. And that improves the confidence of people, which I believe in the year 2021 definitely has happened. And people have opened the Demat account. Of course, people would also open Demat account, not necessarily only one, they would have opened five. It's like how we all open five bank account. I'm sure everyone would have opened at least minimum of 2, 3 Demat account. And this essence, in my own belief, is have improved the penetration, have improved the understanding of the people investing in the market. Even I would say not only millennials, even the people who are age group of 40 to 45, who always investing in market was not a believer. Investing in the market, they never used to believe. They always used to hate in investing in equity market. Even they have come to the equity market. Therefore, they have realized importance of investing in equity, which in my view is a good cultural change and a good habit change, which in my view, I think creating a platform for that to go to the next level in the next 5, 10 years time frame. So that's why I see it. See, investing in the market even by yourself directly, I don't generally consider as a bad for one simple reason. Unless one experience by yourself, and you cannot understand, you cannot understand it better. So I may teach anything, we all may teach anything. Unless one experience by themselves, they will never get to understand more in deep about the investing as a world. As you start investing, as you start realizing the experience, they will become mutual fund investors. I always believe that the mutual fund is a platform, is a great platform, but they will realize only if you stay invested for long term. So in the short term, if you expect the mutual fund to give you a great run in the price as we see in the equity market, it may not happen. But as you go through the volatility, the mutual fund gives a better experience in the long run. All such things, in my own belief, is a good change in the understanding culture which has got emerged in the last year, which in my view creating a platform for the future growth.
Absolutely, Bala. So, as we start this new year 2022, there are multiple things that are going on. We've seen like what many call the greatest bull run that Indian markets have ever seen in the last 1.5 years. How do you see things panning out in this coming year? Do you see consolidation happening? And the other larger overhang is COVID and Omicron. It seems like this time, thankfully, Omicron is the third wave is mild, while many people are getting infected. So, what is the overall sentiment, and what are your thoughts about how things will pan out in 2022?
Yeah, I think the way I see the Omicron is actually is the last passing phase, I would assume. For one simple reason that now everybody's getting impacted in some form or other without getting the need to get hospitalized. This is something I see as a passing phase. Therefore, one has to live with that for say another 1.5 months time frame. There's absolutely no doubt that one has to still be careful given the fact that we had lost a lot of lives in the first wave and second wave. Therefore, better to be careful, but at the same time, without having too much of worry. But having said that, the equity market in general, my own belief is will remain bullish for one simple reason that whatever expectation that we have, that growth should come back, they are still work in progress. In the sense that growth has not come back as we expected, and whatever impact that we are generally were being seen that will come from both from the economic growth point of view, employment point of view, or maybe new projects comes and actually drive next level of economic growth. All such things I think is yet to happen. And therefore, we'll probably see in the 2022 and 2023 will be a good year of investment that is being considered by every corporation in the country. I see revival of investments by Government of India in various projects, revival of the year 2022, a significant progress that can be seen in the manufacturing sectors like semiconductor manufacturing sectors or maybe panel manufacturing for say solar sectors or maybe electric vehicles being manufactured in India. Basically, you'll see a significant improvement in the manufacturing sector investments. See, all those things, what does it mean? It'll actually create some bit of the ecosystem. All of them will start flourishing in the overall this kind of improvement. And last, of course, is the interest rates is also have a very greater bearing on the entire investment decisions. So I see actually in the year 2022, even Reserve Bank of India will be very, very careful while rising interest rate, while looking at the inflation. Yes, inflation may go up and down, but would they panic? Would they have knee-jerk reaction in terms of rising interest rates? My belief is no. They will do a very gradual manner. But as interest rates start rising, even in the initial phase, generally it will lead to there is a tendency for people to borrow money for any purposes only if they see marginal interest rate rise. So I see that actually creating a kind of stimulating demand for investment demand to go up. Therefore, 2022, in my own belief, is will be a good year of investment to come back, and therefore the capex cycle will increase. If we go by what we are seeing already in the global market, that import basically there is a two component for external factors, right? One is the exports and import. And import, whenever you do, this is more to meet our internal requirement, which you don't get it internally, therefore you get it from outside the country. The import is again a two component, non-oil versus oil. And today the non-oil import also has been rising, which is nothing but a reflection of growth coming back. So therefore, that is being the case in my view, 2022, this is the growth coming back. But one of the things that one has to just keep in mind, in the historical standards of observation in the equity market, the market goes through the four phases of cycles. One, there is a phase of despair. Completely is gone, everything is dark, nothing is going to happen in the market, you just sell and go away, right? That's one phase. That actually come for about 1.5 years period, which is basically the year 2020. The next is actually the phase of optimism, hope and optimism that comes in. Then comes a real growth phase. You'll see companies making money, their EPS will increase, earning per share will increase, but stock price may not do well. Then comes the phase of optimism, another round of optimism. So I think in my view, we are in the phase of hope and optimism and growth phase. So in this kind of scenario, what could potentially happen? Earnings start coming in, but need not necessarily that lead to a significant increase in stock prices. The stock price always discounts some of the positive well in advance. Maybe 2021 have discounted lots of stuff. 2022 probably will see some more discounting happening. Therefore, market will remain bullish, but need not necessarily will give you exponentially high return as we have seen in 2021. That is the market cycle in which always market moves. So my own belief is I think we are at a stage of hope and optimism still remains, but we are getting into the growth phase. That something is good for the market for to remain bullish.
Bala, you briefly touched upon some of the sectors, semiconductors, for example. What are the sectors that you think will outperform in 2022? Any sectors specifically that you are bullish about? Or one of our viewers also asked a question, Kula Kalita, what are the sectors in which I should invest in? He asked. So, what would be your answer to that?
Yeah, I think I'll talk about the investment a little later. What investment they could consider, but otherwise, on the basis of what I just explained earlier, and also on the basis of expected increase in government spending and also private capital coming back, and we'll probably see sectors such as capital goods sectors which have not been doing that great. I think we'll probably see capital goods sectors actually to come back. This will also include sectors within the power sectors, equipment manufacturing companies. I think probably they would come back in the year 2022. Second, we also believe the real estate equivalent, basically the ones the real estate starts as a sector picking up as part of the drive, which normally happens in boosting the consumer demand because the low interest rate regime can actually create a whole ecosystem related to the real estate sectors like cement. All of that I think should do well in the year 2022. And lastly, of course, the banking and financial sectors having now seen last 2 years of consolidation, some bit of underperformance, we can say. But that being the proxy of the economy, as the interest rates start rising, as the lending rate starts going up, generally the banking and financial sectors tend to do better in this space. Last but not the least, in our own belief is, I think digital technology space, people may think actually it's a cyclical sector or maybe people may think it's thematic. I think after the 2 years of pandemic, again, the way I think the sector is getting evolved, it seems to be, it now is becoming the structural part of the every country. And therefore, that sector potentially will become the longer term investment opportunity for investors. So this is the way I think I see it broadly in terms of change happening. I think auto also a sector we could see probably a revival. Those who have the business which has been existent for long, at the same time they are finding their wheel more in favor of the new age technology within the electric vehicle and so on and so forth. Whichever companies actually are willing to actually change their business model in order to sustain for the future, such companies coming from automobiles also should do well in the year 2022. But having said that, while these are my sectoral views, but from investors' point of view, you must keep in mind there are funds in the mutual fund space who focus on all these sectors. They go overweight and underweight depending upon which sector will do well, such as flexi-cap fund could be one of the fund that one can look at. Also, given the fact that I see a widening of base in the equity market, like probably there is a high probability Nifty will give say X return. The rest of next Nifty 50 or maybe the other sectors like mid cap and small cap will probably give higher than the X return of Nifty itself. Basically, I'm saying broadening of market would happen in the year 2022. And that being the case, there is a high probability even the large and mid cap kind of schemes or the mid and small cap kind of schemes would potentially be a better opportunity that one can look at in that space. So basically, just to say, flexi-cap fund, which of course agnostic to the various sectors, basically has a flexibility to move from one sector to other sectors. Large and mid cap, I've got same facility, but except that he has to have minimum so much exposure to the mid cap fund, mid cap stocks. Therefore, that provide that diversification. And the mid and small cap, given the fact that breadth in the market will widen, and more companies will also look at fulfilling their aspiration because next generation also taking over the businesses. Therefore, they will look at value creation for the shareholders. Therefore, that segment also, I think, ideally speaking, should do well.
Bala, so one of the themes that caught a lot of investor attention in 2021 is international investing. A lot of mutual fund houses launched NFOs in international investing, NASDAQ, and so on. And Indian economy, if you look at it, is predominantly around traditional industries, be it IT, FMCG, industrials, and so on. But world over, momentum seems to be on the side of advanced technology spaces such as be it cloud computing or cybersecurity or electric mobility, artificial intelligence, and so on. So, is there a case for and many regard these sectors to be the future of many economies, how economies will be defined. So is there a case for the core of any investor's portfolio to contain these international funds that have exposure to these technology stocks, rather than being relegated to the satellite side of one's portfolio? So how do you think about that?
Yeah, I think I see this whole portfolio consists in two parts. One is your core investment, which is the core is your traditional. The companies will search in for even the change world also they will search in for the future and so on and so forth. That comes as part of your core investment. Then comes with actually the entire new age technology platform that you're talking about. These are the companies for about 10 years back or 5 years back. Nobody would have imagined that Google would do so much in the international market. Or nobody would have thought about Amazon will become such a large company. These are all new age platform. I think those opportunities comes as you rightly put it. You'll find companies in the new space, including biotechnology. You'll find many companies coming and creating a future business model. Therefore, from that investment point of view, while India, most of the companies are coming in this segment, and given the fact that these companies are more stronger and established, more successful in the international market, therefore investors can consider some portion of the investment into these kind of schemes. In fact, people like us have already started looking at companies that we can make investments both in US as well as in China and other markets by way of launching international fund, including the Nasdaq fund that we have launched. In fact, if you take the Nasdaq as a composition, the Nasdaq as a composition has got only the new age technology companies and biotechnology companies or electric vehicle companies. The representation in the Nasdaq, though the large pool of companies are there, the bigger companies in the Nasdaq are predominantly actually new age businesses. Whereas if you look at the Dow Jones, will be completely different from the Nasdaq, given the fact they'll have a mix of new age businesses as well as the old businesses. Therefore, the one way to participate in this a portfolio approach that one is better to take, because at the end of the day, we need to also count the new age platform companies. Some may exist, some may not exist. Right? That something will be there. Second is new age companies will also go through a significant volatility. Those who are not able to sustain the business model, they have to rediscover. They may go through a pain period. However great the company, however great the management is, suppose I get wrong, suppose I get in some of these companies, there's a high probability I will sell on the low and buy on the high. Right? Both can happen. Therefore, it's better to take the portfolio approach, as I just mentioned, that one way to increase the exposure rather than going and looking for such kind of companies, better to actually put in the Nasdaq ETF, and that will to large extent take care. Then any such funds I think would come with more specific to only invest in those kind of companies can be diversified as a satellite portfolio. So the way I see is any investors, even within India itself, for example, I was just looking at last 1 year return, just 1 year return I looked at, and I looked at a 3 year return, 5 year return, 10 year return. We always think digital and technology companies are volatile. At the same time, they are the future. So because they are the future, though they are volatile, so if you look at last 10 year return, they are given fantastic high return. They are given significant outperform Sensex, Nifty, or even other indices. The reason they have done, because you have to live to the volatility, but given the fact they are the future future business builder, therefore I need to stay invested with them. I think as long as we have that principle understanding right, and then have a portion of portfolio into divided into two part, core and versus satellites, all such investments can be part of the satellite portfolio itself. I mean, within India, we can of course play the same theme through digital technology fund itself. See, at the end of the day, I have seen over a period of time, return for any asset classes would be nominal GDP plus say 3% for say census companies, plus 6% for say rest of the companies, and plus 7% for these kind of satellite companies. So it will not be significantly higher. Over a period of time, the return get adjusted. But I don't think you'll see a spurt in some period of time. You'll see a big spurt. The stock will double and triple and 3, 4 times, 6 times in a single year. After that, they'll go through a consolidation phase. That's the way normally market behaves. If you keep that as a principle, then this kind of diversification, I think, is much more doable.
Got that, Bala. So another theme that is much talked about in the recent days is silver. So silver, has outperformed gold in 2021, and in the last 10 years, for 4 years out of 10 years, silver has outperformed gold. And SEBI has also recently allowed for silver ETFs and funds to be launched in India. And Aditya Birla is also launching its silver ETF slash fund of fund starting today. And for dear viewers, the fund is available on Finity, so please consider investing. But my question to you, Bala, is what is the role of silver in an investor's portfolio? How should an investor think about silver? Is it the same as gold? Does it replace gold as a hedge for, let's say, uncertainty slash inflation and other things? How do you look at silver?
See, I think we can't say there is a correlation between gold and silver. I think both of them are precious metal, no doubt. The usage can be different from both asset class will have different kind of usages. But what I think both have got in common is actually every household would like to own gold, would also like to own silver for different homeware purposes. Therefore, silver actually is forming part of the every household in the country. And second is gold. Normally, people buy and bar and keep it, or in the form of jewelry and keep it, because whatever kg of gold we buy, still we can put it in one small pocket and keep it. Whereas silver is something people don't have generally the habit of buying silver bar. They have the habit of buying silver vessels. Because if they buy a silver vessel, generally they look at the storage and the base of it. They don't keep accumulating unless there is a need to buy them. That's one way of looking at it. Therefore, the silver ETF coming in, you can put any amount of money as a silver ETF and have it in the form of demat form. That's one way of looking at it. Second is silver has got a greater usage in industrial activities also, apart from household. And most of the industrial activities, this being a subproduct of copper smelting or even zinc production when we do, silver is one of the byproduct that has got a greater usage in the industrial activities, right from automobiles to the electric vehicle companies or maybe even solar panels. And the usage of silver goes into multiple industrial activities. As the industrial activities pick up, the growth comes back. There is high probability of having a higher demand for silver. Therefore, we will see sometimes sporadic movement in the silver prices linking directly to the industrial metals. And that's the advantage that we get. At the same time, it also turns into a volatile period when the industrial activities come down, growth comes down. Naturally, gold does better. As a period, gold does better because people think safety is more important when actually the economy goes through a down period. Therefore, these two aspects, if you look at it, silver definitely holds a merit to have part of everybody's portfolio on this context. Again, silver can be considered as an asset allocation strategy along with gold. And there is a silver ETF definitely gives you an opportunity to get the dollar value at all point of time. Therefore, an opportunity to participate even in silver. If you're not able to invest in dollar, which all of us cannot invest in dollar, there's one way of investing dollar through the silver and gold. So that's way actually because the price are fixed to the dollar prices. That's where the price moves. And finally, is the asset allocation when you look at it. These investments cannot be made on the basis of return. So most of the people should not make the mistake. I'm making investments on. It's like how we make investments on real estate. We don't look at what is the return I'm going to expect from real estate. We simply buy investment. The return appreciation actually is incidental, right? That's what normally happens. We depending upon activities pick up. Therefore, silver also you have to keep that in mind while making investment. Have it as part of asset allocation, and have a reasonably good chunk of silver as part of your future need, which of course all of us will have future need, even including for immediate disposal of your the assets when it comes to your need after say retirement, so on and so forth. If children marriage comes, and India is one country spends a lot of money in buying silver when the children marriage comes, including buying gold. Therefore, we consider this as part of that. In addition to that, the industrial activities definitely gives a better opportunity to own in silver compared to gold. Therefore, is something one should add it to the overall portfolio, the firm's silver. In fact, I myself told my colleagues that I'll also now add silver ETF to my portfolio as part of my overall asset allocation. And given the fact that I don't own any silver at all, except what I use it for my buying, use it for my household usage on a daily basis.
Bala, so if an investor asks you this question, so I want to buy silver, how much silver should I buy? Of course, a lot depends on their risk profile and their needs, goals, etc. But do you have like any high-level mental models of how much should I invest in silver? Or would you
See,
say
the
just
way,
accumulate?
yeah. See, one is of course accumulating is one part. See, in terms of asset allocation, the way I apply the principle Abhilash. So there are five different type of asset classes. One is equity, then comes is your fixed income, then comes is real estate, then comes is gold. Now silver gets added to that. Right? There are five different type of investment. Then you take, of course, PE, alternate investment, all this kind of thing that I'm not even counting for the time being. These are five asset class I consider. If I'm making investment for say 10 years or 20 years, 30 years, let us take I'm making investment for 10 years. I have to put actually each of the asset classes where I'm going to get a significant return. So equity will give me a significant return on what basis? GDP plus 2%. That's my expected return on equity. Then fixed income will give me say an average I would say 6%. You can make the assumption, 5 you can make assumption, 6 you can make assumption, whichever you make assumptions. Gold is something, real estate is something, and over a period of time, adjusted for inflation, will give me X percentage of return. Then comes is the gold will give me inflation adjusted return, just marginally above inflation. Silver could be a little above gold as a asset class because of the industrial usage, etc. If we apply this principle, invariably in everybody's portfolio, if we go by the expected return versus 100 rupees, I have to allocate on the base of the expected return ratio and then allocate to all the five asset classes. If I go by that principle, my own gut feeling is the equity will take away 50-55%. Fixed income will take away roughly about 10%, and real estate will take about say 15%, and gold and silver would become the balance 15-20%. So that's the way I think the formula will work. This is my mental mota understanding which I built over a period of time. That is the mental math in which one can allocate. Depending upon the exposure already have. So each one of us, somebody must be owning too much of gold. So there is no point in all your savings in gold when you know very well it will only give you inflation return over a period of time. I think whole purpose of investing is to beat the inflation and then make it for the future survival also, right? So therefore, every asset class we look at it this way. I'm sure this mental model which I'm just mentioning will give a greater sense of understanding as to how much one should allocate to silver, gold, and other asset classes.
Thanks, Bala. So I'll take one of the audience questions. So this is something that a lot of people talk about these days. I would like to know your views as well. So Madhusudan Thakkar is asking, Aditya Birla Mutual Funds has invested about 469 crores in the Paytm IPO across 10 different mutual funds. How do you look at that particular stock now? Any thoughts on that?
See, clearly, we were one of the fund. We invested in that along with three or four other funds, and also including the FIIs who are looking at this kind of digital platform. In fact, we have been one of the fund investing, not just investing only in Paytm, including Zomato, and then the ESN commerce. I think like every new age platform we have been participating, and we have been quite bullish on new age platform, so to speak. And Paytm is one such platform where we made an investment purely on the basis of the relevance that they make on the consumer life, right? They remain relevant player, the users, consumers, whether it is payment banking or any other payment gateway that they have created and other facilities they are creating, has been one of the fast growing technology platform. So now, of course, the stock price is a function of various things. Sometimes one may get it wrong on terms of how you price it and so on and so forth. Now, having seen to where they are today, of course, significant correction has come. I think there is a merit in every platform to get their value of shares. Therefore, we as a fund house remain bullish on the new age platform, no doubt. But I think some of the things that stock price is a function of various expectations that gets set built. If the market is divided, then naturally the stock price underperformance is high. Either if everybody has got the same view, it will do well. Irrespective of whatever the valuation, the stock do well. That is what I have seen historically. It is if it's a out of 10 people, if it's a 5 are bullish, 5 are bearish. Normally stock don't go anywhere. If out of 5 out of 10, 3 are bullish and 7 are bearish, stock price generally come down. So and then if they out of 10, if the 7 are bullish and 3 are bearish, stock price generally tend to go up, right? That's the way historically I see the behavior of the market. Currently, the stock price underperformance largely because of behavioral aspects that also got set in. But I think this company is doing well. Even the recent numbers they reported good numbers, and month-on-month numbers they are doing good. They are doing a good job. I think I'm sure somewhere the market will find attractive at certain price.
Thanks, Bala. So, coming to some of the work that Amphi is doing, you've been the Amphi chairman from 2016 to 18, and now again, starting October 21, you are chairman again. Uh, Amphi has obviously been doing phenomenal work in terms of educating the masses about mutual funds, the benefits of investing in the equity markets, and so on. One very interesting thing that comes to mind is I was speaking to one of our investors during my usual outreach to investors to understand what they think. So this particular gentleman is a older gentleman, about 50 years old, and he said, "See, you guys are doing a good job. Mutual fund investing is easy. It's paperless and all that." But he said, still there is a huge chunk of the population who don't have a PAN card, who probably earn 300 rupees or less a day, but still they have their own aspirations. They want to save for their children's marriage. They want to save for their building their future wealth, and they want to participate in the India's growth story, which they are not able to do right now. Uh, what are Amphi's plans? Two questions in two parts. One, how do you look at this particular problem that needs to be solved for? Obviously, right? There is like a large segment completely have access to capital markets, to even if they have access to a mobile phone, they still don't have a PAN card, they still don't have a bank account. So lots of problems to be solved there. So are there any specific, I'm asking this question on behalf of him because he asked me this question. I did not have much to tell him, but I'm sure at Amphi and you would have thought about it a lot. So any thoughts on this, and what are other plans for Amphi in 2022 as we go forward?
See, in fact, we were debating about the entire education part. I think the year 2012. In fact, I must confess, the initially the ball was set rolling by Sandeep Sikka of Nippon. Then he took over. Then Leo Puri of UTI took over from him. Then I took over from Leo Puri to put this on a faster motion. So they build the foundation, right? They build the foundation. Therefore, I must give them the credit. As they build the foundation, then when I took over as chairman in 2016, then I said, what should be the overall approach that mutual fund should create? The first and foremost, the approach that we took that time as an Amphi, which is what I was driving along with a team of people. Fortunately, when it comes to the question of industrial activities, the mutual fund players come together. Amphi predominantly drives most of the decision through a collective participation coming from the industry experts, from the industry like myself and others, from individual functions. So we had a set of marketing people representing all the top mutual funds and some of the other mutual funds. When we debated, first and foremost, we said mutual fund should be part of the consideration of every investor in the country while having a chat over coffee or tea in the morning. So that was the first set. So that's why the mutual fund Sahi was actually created at that point of time. And I must also thank SEBI for having agreed to promote mutual fund as mutual fund Sahi for getting every household in the country. Now, having seen that, now having created mutual fund Sahi is something has worked really well in the last say 7-8 years, because now people say mutual fund Sahi right? That's what they say. Having done that, the point that you mentioned about still challenges are there. So still challenges as an opportunity. One of the things that we recently, after took over as Amphi chairman, we are just debating as a team with the rest of the industry experts as Amphi board. Second, we also discussed about with the agency who has done the work in the last 6-7 years. I just told them, just why don't you come back and tell me what are the things that we need to do in addition to what you've done so far. So one such idea which came, actually the mutual fund should be made as a mass product. So mass product is nothing but making everyone ready for investing in mutual fund. See, whether the investor or not, that is a different ballgame altogether. See, investing is actually the decision of individuals. Yeah. Are you able to hear me now?
Yeah, Bala. Yeah, there was a
Yeah.
slight glitch there. Yeah, please continue.
Yeah, correct. So one of the things that we are now finally agreed that as an endeavor to build the industry to further new level, creating more than awareness, making every household to be ready to invest in mutual fund. This is nothing but fulfilling your KFC, which is nothing but having a PAN number, having your registration done for investing in mutual fund. It's like do your KFC completion. That's what we felt that we must enable every household in the country to be aware about, be ready for investing in mutual fund. So that's something which is done. Then you cross the first stage of hurdle. Then comes is the investing in real world, which of course there are a lot of people are doing a lot of work. I'm sure they will get onboarded on the mutual funds. Like we are doing a lot of Aditya mutual fund, doing a lot of initiatives on university education. Like as others also doing it. So one individual we are doing it, at AMC level we are doing it. I think all put together, my own belief is will set the next round of trend. In addition to that, I must also mention, I am also sitting in the investor protection cell of Security Exchange Board of India as a honorary external member. And they do their bit in terms of educating investors about how to be careful while making investment. They are doing the protection part. And I'm also associated with NISM as one of the board of governor. And NISM is doing their bit in terms of increasing the awareness about investing in various capital market products, including mutual fund, by enhancing the knowledge of people by creating various certification programs. Therefore, all collective effort that is going from everywhere, including AMFI, my own belief is we will probably see more investors getting onboarded in the coming years. In fact, I must also confess, my own driver not been investing in not being part of my driver for the last 25 years. But last week he made his first investments in mutual fund. So
Nice.
I think that I think goes to show the awareness increasing.
Absolutely. So Ashok Kanade is saying AMFI should recommend minimum investment in mutual fund should be down to rupees 10 per day. Um, what do you think about that? And this is something that I keep hearing from some of our own investors. Why this 5,000, 1,500 limit? Why not 10 rupees?
See, I'll tell you, interestingly, I'll tell you, while 10 rupees taking absolutely no issues, we can take 10 rupees, mutual fund can take 10 rupees. There is a element of cost is involved. Suppose for 10 rupees, we incur a 2 rupees cost, then you got only 8 rupees to invest. But I get 10 rupees to invest, but I have to spend 2 rupees to buy this transaction cost, right? That's one. Leave aside for the time being that I'm willing to bear. But I think the mutual fund should not be made as a cheap product. The sense, I'll give you one simple example. I mean, not to get offended. When Tata started Nano, everyone got extremely excited. No, it's a cheap car. Nano, I'm going to drive and so on and so forth. After some time, people started believing, no, Nano is not my vehicle. I think I should own Maruti 800 or Maruti something else or Tata Indigo itself. So most of the people initially got excited on Nano vehicle, saying it's a cheap vehicle, I should go for it. Over a period of time, people start thinking, oh, Nano is not meant for me. I think I should go for a higher vehicle. If you take the investment world also, it's not about 10 rupees. I think today people are willing to spend, say, I used to tell a lot of these millennials, they don't mind spending 900 rupees for buying a pizza. Whereas they mind putting 900 rupees in one single check in a mutual fund. So therefore, I think if you change your mindset, you equally spend good amount of money somewhere. Maybe you cut some of your unwanted expenditures and divert some bit of it in the mutual funds. And probably the outcome of that, you also consider this as an expense. Don't consider it as a investment. The outcome of that will be significantly higher without your knowledge. Therefore, doing 10 is not an issue. But my own personal belief is, you tell him you have to minimum say 3,000 rupees or 5,000 rupees in all fairness. He'll put that much effort to get the 5,000 rupees, make the investment. The moment you make 10 rupees investment, in all probability, you will not even invest the 10 rupees. So that is the way I look at it, though I'm not against the 10 rupees. Basically, the chiller kind of things. Then remind people to continue to think as a chiller only. They don't make them. This is my personal gut feeling and opinion.
No, absolutely. So there definitely, I think, is a case for making that available, especially if you talk about the bottom of the pyramid, people who are, I mean, we are still a long way to go when it comes to making products, including people like us, fintechs, inclusive of people who are at the bottom of the pyramid in a lot of ways. Plus, like you rightly said, transaction costs, payment gateway costs are a real thing, and that needs to be taken into consideration. So those are some of the considerations there. So Bala, the last question for today's session. You are a proponent of a portfolio based approach based on goals and needs for every investor. So, at a high level, if let's say I am an investor who came into the market, started investing in 2021, are there any high level frameworks, mental models that you would suggest? Uh, how do I should I think about investing?
Yeah. I think first and foremost, mental model which I apply is one, the way you look at your PF saving. Suppose one employee of a company, there is a automatic deduction happen for the PF, and there is a reduction that happen for your gratuity payment, which is the company's pay, and then for the pension, the company deduction. The same way you create your own discipline of investing in SIP, that too in equity. Because anyway, if I consider the PF way you ought to make investments in SIP, then better you consider the equity as investing for longer term. So that's one. Definitely takes care of your all your longer term goal needs, whether it is retirement or children marriage or buying a house. All such ambitions will be taken care by choosing SIP as a simple principle. The second is I myself are a believer that that SIP is something, I put it as a automatic deduction. It's actually, if it comes to your account, then if you write a check, there is a high probability you stop writing a check for some month when the market falls. In fact, that is the month you have to make the payment. That is exactly the month you will also stop it. So if you have to write a check, if it's an automatic debit, the money will just go automatically. Even worldwide, this is what is coming in. Because the consumer mind at the end of the day, investor's mind can be very, very what you call fluctuating. So that I think one has to keep as a principle, which is what I also believe. Money goes automatically, it just goes. Then after that, I don't reverse my decision. Therefore, that's one way of doing it. Second way of doing is the mental model, which I just mentioned about. You have different purpose for which you make investment for various goals. All goals in the long term have to be extremely costly, in the sense you have to meet those goals. Whether the education, if you see, maybe I would have spent hardly any money for my education. Today the same money that I'll be spending for my kids will be say 20 times, 30 times, or 40 times higher than what I would have spent. That is the way the world is going to move even going forward. Therefore, that is being the case, you must keep this in mind that longer term investment again have to be done through the equity as an asset class. That's a pure mental math. But from a return expectation point of view, just ensure, but as you start progressing in your age, just look at your core versus satellite, then asset allocation model. This asset allocation is nothing but if I'm come to the age of say 55, 60, then I must probably have a little reduced exposure to equity. And that's the kind of principle. I think these principles I think will definitely give a greater outcome in the long run. And this principle only at the end of the day make investors successful in the long run, not otherwise. So that's something we have to keep it. Also, just ensure a lot of people have got the habit of taking out the SIPs if the return doesn't come for the last 1 year or 2 years. Never make the mistake. I've seen this in my lifetime. Many people have made the mistake of withdrawing SIP in a falling market and starting the SIP in a rising market. In fact, in both the decisions, you'll never achieve your purpose. Except staying invested through the cycles, only you'll achieve your purpose. This is a simple, not even mental model. This is more discipline, I'm saying.
Absolutely, Bala. Thank you so much. We are at the 49-minute mark. I thoroughly enjoyed the conversation today. I'm not sure if I was able to pick up, most of the questions. In fact, we picked up only a couple. Apologies for that. Please do share your questions if you have more questions in our chat. And if you like the content, please do subscribe so that we'll be able to reach more people and you will be notified in advance for future sessions. And like I mentioned, Aditya Birla Sun Life Mutual Funds Silver ETF and Fund of Fund NFO is currently live on the Finity app. If you are considering silver as wanting silver to be part of your portfolio, please go ahead and invest. Bala, thank you so much once again. It was an absolute pleasure and looking forward to having you again on our show in the future.
Yeah, thank you, Abhilash, and hope it was useful for your viewers and your firm as well. Thank you.
Absolutely. Thank you so much. Dear viewers, that's it from us. Depending on where you are, once again, a very happy Makar Sankranti, Pongal, Lori, Bihu. Have a good day. Thanks.
Thank you.